mantra that seems to come out all the time is that we need to get more money into agriculture, but it's never the question answered, how much does the sector want? How much does it demand? Is that changing? What's the sort of picture on the ground that you're seeing? Michael?
To answer that question, can you hear me?
Yeah.
Yep. The demand for agricultural finance is, I think the demand is high on the investment side when we're looking at, using better productivity techniques to increase supplies. So there's a lot more demand on the investment side. There is, most banks tend to concentrate on working capital. They both go hand in hand. And when we talk about profitability out of agricultural lending, we have to look at it long term, not just season to season. So there is no upside to the demand. I think farmland in smaller, in developing countries, there's an underinvestment in terms of fixed loans, term loans, technology, micro irrigation, polyhouses and things like that. So there's a lot more to be done on a longer term, a long tenor loan basis, where most banks tend to, look at short-term working capital.
And but are you finding that farmers are increasingly wanting finance? And if so, what for?
They will invest. They will look to invest if there is a market that can absorb a superior product. In the absence of such a market, they are content to do their traditional varieties of crops and sell it to the local traders.
Okay. Florence, what's the experience of Equity Bank? Because you've grown your demand hugely, but is that because you've just taken space from other people, or are farmers in Kenya investing more?
What I would say about the demand for agriculture finance, I would say it is big. And I would not just look at it from the farmer's end, I would want to look at it across the value chain. So from production to value addition to processing and to the consumers as well. So if you get it right across the value chain, you get value for agriculture finance, making the demand there, because if you look at the production side where the small scale farmers come in, they're looking for financing for production. That could be inputs, quality inputs, that is seed, chemical and fertilizers. They would be looking at innovative ways of production that will minimize the risk and also that is, you'd say, fairer in costs. They would not look for very expensive technology, but modern and cheap. If you look at value addition, it's sometimes it's the farmers wanting to get into value addition. So it's not value addition, as you'd say, on the entrepreneurial side, but it's farmers wanting to go a step further. So you'd look like at a small scale dairy farmer who wants to add value to their milk and in the process get into the agribusiness space. If you look at processing, as Ross has said, a lot of companies, food companies, want to look at farmers for production because of the traceability. So you would want to know where are my products coming from. So with a proper value chain, I think the demand for agriculture finance is there.
Great.
Yes.
Yeah. Ross?
I think about it from, when I think about, we've moved from an era of surplus to scarcity. And in doing so, I think it was a huge wake-up call to companies, brands, that the world had changed with regard to F&A and particularly commodity risk. And when I think about from 2011 forward, it really echoes that. I think about companies like the Coca-Cola Company who realized in an era of scarcity that actually they were taking tremendous ag commodity risk. We actually, a year ago, finished a project with them, and as a result, they came to see that as a soft drink player, they were actually spending 10 billion on ag commodities and only 6 billion in global marketing. And I mean, I think that was a big wake-up call to them to say, we have to think about our business differently. We have to think about ourselves as incurring significant ag commodity risk, and in doing so, who are our other stakeholders in the value chain that supply us, and how do we, work collaboratively to mitigate that risk and create value in the future. So definitely a different mindset in post-2011.
Wow, so you're seeing a change of mindset in your customer.
Absolutely.
Yeah.